There's a lot of application in drug discovery, but it's kind of nascent. It's quite early. It's quite powerful, but it just hasn't yet matured. I think if you're imagining a part of healthcare that's not impacted by AI in the future, then you just lack imagination, right? It's going to be pervasive.
Hi there. I'm really happy to be joined today by the dynamic duo, Dr. Richard Evans from SSR Health, as well as my colleague Rob Moffat, lead portfolio manager for our healthcare strategies, giving us an update on the ever-evolving healthcare sector and giving us an update on, how our funds are performing in this evolving landscape. So maybe Richard, you can give just a brief update on SSR and your focus at SSR.
Sure. So SSR Health looks at healthcare from sort of the top down, right? So instead of just looking for 3 or 4 or 5 individual stocks, we're looking at the entire healthcare landscape and trying to determine not just what the interesting stocks are, but first what the appropriate subsectors are, because the sector is so diverse. You've got drug wholesalers, drug retailers, drug manufacturers, biotech companies, device companies, and getting that subsector balance right, because these subsectors are so different, is at least half the performance of a typical healthcare portfolio. So that tends to be our main investment research focus. Lately, what we've done is we've taken a lot of the data sets we curated over the years as investors and begun to sell those on a subscription basis. And the one that really drives our business at the moment is drug pricing. And so we've become the predominant provider of drug pricing data to governments, academics, manufacturers, and trade associations.
So we've been working with Richard and his firm for 10 years, really once we started our healthcare strategies at Middlefield. And I know Rob works very closely with Richard today. Rob, how would you describe how SSR and you as our lead manager work together?
Yeah, I think given the expertise that Richard just described, the biggest value add from my perspective is in asset allocation. So, typical sell side research will help you with fundamental analysis, bottom up, which stocks to pick. But oftentimes it's important to decide in the first place which areas of the sector you want to be in. So, Richard really helps us navigate, which subsectors we want to be in. Specifically from a regulatory and a drug pricing perspective, healthcare can be challenging at times. So he really helps me to navigate, which areas we should be overweight, underweight, and that all really boils down to asset allocation.
So in terms of the portfolio companies, I know you were at a healthcare conference in New York last week. Briefly, what was your main takeaway from what you were hearing from management teams in the healthcare sector?
Yeah, I think the biggest takeaway from being in New York, this is a very big conference last week, is that there's just so much exciting innovation taking place right now in healthcare. The presentations that I saw from the formal presentations for management teams are, big updates on large multi-billion-dollar late-stage trials. Basically, we're getting better at curing diseases, and oncology is a huge area of advancement right now. But even just in the conversations between meetings and in the hallways, I was meeting with AI engineers and data scientists and just this cohort of people that you wouldn't expect to find in healthcare. And there's just so much innovation and growth and opportunity in the sector right now. So that was my biggest takeaway, is that, this is just a great area, exciting area to be invested in right now.
Richard, are you seeing AI and having an impact on healthcare, and where do you think we are in this baseball analogy kind of cycle of AI in healthcare?
Yeah, I think we're just warming up, right? I mean, the celebrity hasn't even come out throughout
in the bullpen.
Yeah, absolutely. It's just so early. So right now, the obvious applications like pattern recognition and reading radiographs, augmented reality, which is a favorite of mine, being able to see, femoral artery when you're doing a cut down, before we actually get there. Identifying those critical structures, things like that. Pretty straightforward applications. Some of the things that are emerging are, think about an ICU patient and all the data that's flowing off that patient. And if you're...
real-time data.
Real-time data. Yeah, and if you're the intensivist, you're running an ICU that may have 15, 20 patients that you're responsible for. So have AI monitoring that and saying, hey, this looks like a pre-MI data stream, pre-myocardial infarction data stream. You need to go give this patient a little bit of attention, or just be on the lookout for this shift in signs. That I think is a fairly near-term application. There's a lot of application in drug discovery, but it's kind of nascent. It's quite early. It's quite powerful, but it just hasn't yet matured. And as I had mentioned to you elsewhere, I think if you're imagining a part of healthcare that's not impacted by AI in the future, then you just lack imagination, right? It's going to be pervasive.
Major factor.
Yeah.
We can't talk about healthcare without talking about weight loss drugs and GLP-1. How are you looking at that sector, Rob? Where are we right now in this? Again, baseball analogy. We're in the early innings of GLP-1. Do you think now it's starting to mature?
Well, the game's definitely started right now. So these are multi-billion-dollar blockbuster franchises now that are on the market today. I think that this is ultimately going to end up being one of, if not the biggest classes of drugs of all time. If you think about it just from an addressable market perspective, there's over 1 billion people in the world that have obesity, and there's another 500 million people that have diabetes. So this is a patient population that's in the hundreds of millions of people. So right now, from a market penetration perspective, we're probably in the low to mid single digits of people that are eligible for these drugs that are actually taking them. So I believe that there is a ton of runway for growth ahead, and we're only going to see these drugs being taken up more and more. Right now, the biggest gating factor is actually supply capacity. There's more demand than there is supply. So as the industry leaders, namely Eli Lilly and Novo Nordisk, invest in bringing on new manufacturing capacity over the next few years, you're going to see revenue grow kind of in lockstep with that.
So, Richard, those are big numbers, billions of people. Is that the addressable market, or are we really looking at a fraction of that over time?
No, I think it is the addressable market. So as a former pharmaceutical executive, you have product teams coming at you all the time saying, we have this idea that's going to generate, hundreds of billions of dollars. And you just kind of roll your eyes and go, okay, whatever. And so when we look at the GLP-1 market, so you go back and you do your own work, and we did a forecast just as harsh as we could do it, right?
Like discounting it for potential issues.
Just, lack of compliance, lack of coverage, side effects, intolerability, everything. We came up with $84 billion.
$84 billion annual revenue?
Annually, yeah. And
by when?
We didn't do the penetration rate. So what we do is just this demographic steady state idea, right? So when you have patients that meet certain criteria and they have consumed as much as they are likely to consume, given compliance and coverage and things like that, what would the addressable market be? And so that was the most severe forecast I could come up with. Actually, I said globally, that was a US number. That was not the global number. So it's absolutely a big market. The way to think about it, what really drives it, is obesity is the culprit in so many chronic diseases, cardiovascular diseases, renal diseases, orthopedic conditions. And so addressing that underlying driver really solves a lot of problems. So, we had someone that we're both talking to last night talking about being a type 2 diabetic and being on multiple drugs for 2 decades, going on GLP-1 and several weeks later not being on any other type 2 diabetes drugs. And so that's how it's going to find its way into the covered population. And that's something an insurer can get behind, right? So so the cosmetic...
Insurers see savings as a result of covering those drugs?
They see both savings and profit, right? So,
interesting.
Yeah. So it's probably more of a profit motive, because most of the insured patients, at least in the United States, are going to cycle between insurers on average about every 18 months. So you do get some payoff, but you don't get that really long-term payoff because that patient is just not going to be with you. But from a profit perspective, you make around 15% margin on the premiums, and the premiums reflects what is being consumed. So if more is being consumed, the premiums are higher and your profits are higher. So letting these drugs into the population is the right thing to do. The thing is, you want to do it gradually. So you've written a risk-based contract for the year. You don't want to be surprised that year about total demand because you're going to be underwater. So you kind of titrate these things into the population by saying, okay, we're going to take patients that have a certain level of obesity and a certain level of additional disease that's driven by obesity, put it in those patients, and then you start easing the standards from year to year. And I think you'll stop before you get to cosmetic use. I don't think anyone's going to ensure that. But there are an awful lot of people that have obesity related comorbidities that can or will be addressed by these.
Fascinating. Let's switch gears here quickly and talk about the U.S. election. There's a view that healthcare is a sector that maybe you should avoid in the U.S. election year, in the general election. What are your thoughts on that this time around, especially when you look at, Trump's policies versus Harris's policies?
Yeah, so that viewpoint has been correct in past election cycles, Clinton, Obama, and Trump. But this time, healthcare is really not teed up as an electoral issue. So Trump is really not saying anything about it. Harris is contextualizing healthcare as part of affordability and reducing inflation, rather than talking in super technical terms about we're going to change this aspect of the complex system or that aspect of the complex system. And so the bottom line, I think, is if you get Trump, you get better tax structure, which is good for most of the healthcare companies, especially the pharmaceutical manufacturers. If you get Harris, then these subsidies that are an important part of American healthcare demand, some of which were recently installed in the wake of the pandemic and are due to expire, would be extended. So the per capita unit demand, I think, would be greater under Harris, but the tax rates would be higher. Under Trump, per capita unit demand would be lower. He would not extend the subsidies, and he may roll back some of them, but the tax structure would be more favorable. It certainly matters, but either world's okay, right? Mm-hmm. And you don't really have to be super defensive about the portfolio. The psychological thing that we have to think about, though, is a lot of generalist portfolio managers will do exactly what you said and remember those prior election cycles where healthcare really just kind of went on the side and didn't perform. And so we have to think about that, but that creates an opportunity, right?
Well, when I look at our healthcare strategies, which Rob's the lead manager, and they're up 20% year to date, and I would say, to your point, this is a year when healthcare is actually generating some really solid performance. So, with that, Rob, tell me what's working in your strategy and your portfolio mix, and even some of the names, and tell me how maybe you're thinking about the next 6 or 12 months in light of some of Richard's comments on the regulatory and political backdrop.
Yeah, I think the most important thing in healthcare is to invest in companies that are innovating, companies that are investing in R&D, oftentimes, new product cycles that are patent protected. That's what really can make or break a company. So you're looking for companies that have the best chances of coming to market with blockbusters and new product cycles. So we're constantly looking at, who has the most shots on goal, who has the best track record of innovation, percentage of R&D, those type of metrics. But really you're looking for the companies that are going to bring the next big thing. And right now, the best example is probably Eli Lilly and Novo Nordisk, which have drugs that the growth is off the charts. It's basically at a level that we've never seen before. And that is a function of, decades leading up to this moment of intense R&D and science and investing in the right places. So, we own Eli Lilly. That's our top holding right now.
Does the valuation on Lilly today concern you? Do you think it's justified in light of this robust growth outlook?
I think if you look at Lilly on a forward 12-month price to earnings perspective, that valuation would probably scare anybody. It's trading at about, almost 50 times earnings. But what's important is to look out 4 or 5 years and to bake in an assumption for the earnings growth that this company is going to generate. And if you look out 5 years, I can get to a earnings multiple somewhere in the teens at current prices. So I believe in that earnings growth. I think it's going to manifest. And for that reason, yes, it's expensive on a current multiple, but if you look out a few years, it's palatable for sure.
Well, on that note, I think very positive outlook for healthcare. Clearly, not only a defensive asset class, but an asset class that I think is generating some real growth over time in light of, some of these companies and the great innovation and the AI potential upside over time. So keep up the great work, and thanks very much for your input.